Welcome to Slackin' Off with Brady Slack.
Welcome to another episode of Slackin' Off. I'm your host, Brady Slack. Today's guest, Jacob Godar, is someone that I met through an event, through an associate. They call it a business association now, not a mastermind. Apex, right? And I was at the first Apex Entrepreneurs meetup for Q4 this year, and I met Jacob, and we've had a couple conversations since that have been really fruitful and beneficial. And I wanted to bring him onto the show to talk a little bit about his business, some of the successes he's had, how taxes have impacted his business, and how he's been able to grow at the rate that he has. So without further ado, Jacob, thanks for hopping on. I appreciate it.
Dude, thank you for having me here.
Well,
I
I
love
know
talking
you're,
about business. So,
I was going to say, I know
always
you're,
good.
I mean, like everyone else, you're a busy man. You just moved, you've been expanding your business. And
Mhm.
this morning you were buying a couch.
Yes. Well, and closing on the house. We're doing
And
all
closing on the house.
yeah.
So that being said, tell us a little bit about your business. So you're in a home service, but in a home service business, but it's specifically related to lawn care with a couple additional things that you do that we'll get into. Why lawn care?
For sure. Also, I kind of wind it up from the beginning a little bit so you get the context of both locations. I started in just the lawn and landscape, like starting my own business in 2014. I started that in Springfield, Illinois. And as we grew that, I hated like the seasonality of the area. I'd always loved Florida, and there was a direct connection between like 7 minutes from my office in Allegiant or an airport that flies Allegiant, and then now where I live in Florida in Cape Coral, 25 minutes from my house, there is where that lands in Punta Gorda.
Mm,
And so it was always very easy to get back and forth. And so that's what made us push to have the second location here. And really, we took what we'd learned from 2014 to what would have been like 2020 in the first business, and then applied all those things in Florida, and we're able to really scale it up quickly. Within a year's time, what will be, I don't know, we're a little over 2 years now. Now we're even in sales with our Illinois location as well.
wow.
And so we were able to scale both of those things up. Illinois is continuing to grow. Here in Florida, it's got a lot more bandwidth because there's just so much more volume to produce around here in a direct connection without having satellite stuff. And so, the location wise, as far as, the vanity number, both locations will probably be in that 2.5 million mark this year. We expect to
Good for
do
you.
5 million total. And then, some more vertical integration stuff with our Illinois location. We had like a big showroom floor because the building, the commercial space we rent used to be a rental place, like equipment
Mm,
rental.
yeah.
And so, we ran into an issue during COVID and all the, stuff being back ordered and being able to the availability of equipment. And we struggled to get a mower, mowers a couple years ago. And I was like, man, this is silly. And so last year, 2022 in fall, I was at a big convention. I'm like, hey, I'm just going to go talk to Skag mower brand. Like there's none of those in our area. I like those mowers. We use them in Florida. And we started the conversation of making that big empty area that was a showroom floor / training area an actual dealership. So that kind of went alongside of what we already had going. We already had my best friend has a mechanic shop in the back, so he takes care of all of our stuff. And we've kind of got like we're not, I mean, we're all partners, like the whole team's partners pretty much, but we've just got an operating agreement of he manages and gets all the commission from all the mower sales, plus has his dealership in back. And it helps him win with having more revenue and more stuff to work on. It helps us win by having equipment at cost, more availability to parts to fix it, always have to be stocked and all these things. So it was just another thing that was a win-win. And then on top of that, we've got the GrowCom, the coaching group, and that's been something that's it's not really lawn care and landscape, but it's mainly service industry specific, just helping people grow their businesses. And that's purely based off of ever since we started the business in 2014. It had to be 2015. I started making YouTube videos about growing a lawn care and landscape business, and how those ideas of how we grew our service company and what we learned. And after so much time, we had a lot of people asking questions that I just really can't get to all the time on YouTube or on this or on that or the other. So we rolled up into a group to try to help people. And so that's kind of the portfolio of things going on outside of market investments, real estate investments, and other little things.
It's fun to hear entrepreneurs talk about vertically integrating different aspects to their business to increase enterprise value, because I think that it is a skill often overlooked and
Mhm.
an immediate way to increase value, monetary
Yeah.
and enterprise, right? So we'll dive into that in a little bit, but before I do, the first question I want to ask is, how have taxes influenced your business decision making? Now, the reason why I ask this is because there's kind of this first level that I feel like people have to get over, which is this fear of tax. I make more money, I'm
Mhm.
going to pay more tax. So maybe I don't want to make more money. And those are real things that people have said across from the desk, right? And
Yeah.
so, how have taxes influenced your business decision making?
I don't really. I'm very hammerhead on we're pushing forward and we're going to create something, and I really don't care about the consequences. I'm going to take on whatever they are, either way.
Right.
And so taxes like bothered me a little bit at first because I didn't understand much. Um, but like without even meaning to, I fell into this anything I do, I'm 110%. Like all in, all the chips are on the table all the time. And without even knowing anything about it, I kind of already was living by this philosophy of we're going to grow forever and
Yeah.
we're going to keep scaling this thing. There's no cap for me. It needs to be able to help other people on the team and create a career for people. And to do that and to keep growing the people it can create a career for and a substantial career, it has to grow in size. You're not going to necessarily have, unless it's all you want, a really great career at the base level of our company because a lot of those people want to travel through and to be able to some kind of management someday. And so tax wise, like I didn't even know that I'm kind of following the whole principle of buy, borrow, die, like through my business of I'm going to keep scaling the thing. We're going to keep needing assets to drive the company. And with that, we're needing to buy trucks. We need to buy equipment. We're needing to do these things. And a lot of that stuff is, we're being able to depreciate that in this given year, push taxes down the road. And then we turn around and the next year, we got to go buy
Do
more
the
shit.
same thing.
And we got, and like somebody, me and you talked about this before. Someone talked about that's kicking the can. Well, it's like, dude, the way my life's set up is like I will never stop kicking the can. Like we're going to keep getting bigger. We've never had a year. There's other companies that talk about, a company we bought here. In 2020 they had a bad year going on. We had a bad year because instead of being 60% up, we were only 30% up. So
Yeah.
like we're always adding and growing, and so most of the time it hasn't affected us a lot. And now that I'm becoming more educated on it, I'm looking for even more ways through, what put maybe kids on payroll and getting them involved in that shelter something there. And then what other like Augusta rule and all these other things, like what all strategy can be put into it as well. So at the very beginning was concerned and thought it was going to be a big deal. Quickly, I realized between having kids and all these write-offs and depreciating stuff that we had to pay anyway, that it was going to smash a lot of those things down pretty far. And now on top of all that, we're continuing to look for more ways to save even more. For the whole aspect of yes, I want to earn more, but I want to have more to plow back into the business as well because I want to keep growing this thing.
Well, I always tell people the IRS has two objectives and only two:
Mhm.
raise revenue and incentivize activity. Those are their
Yep.
two goals, right? And so,
Yep.
based on those two goals, they're either going to raise revenue by incurring a tax and that tax is going to be higher if you are not participating in activities that they incentivize, right?
Yep.
But if you participate in activities that they incentivize, your tax is going to
Mhm.
be lower. And so,
Yep.
as you've found, the more you've expanded, the more you've grown, the more you've added into your business and vertically integrated this, that, or the other, you make more money, but you still have the ability to pay less in tax. And that's a really hard
Yep.
concept for people to understand.
Yeah, and then it keeps growing and developing. Like so, I'm big on like education, and I hated school. So like, I don't like
That
school
makes two of
education,
us.
but I'm big on self-education,
Yeah.
and so I'm always reading and learning and listening. And then so I'm just constantly looking into what all can be done to do more. What all, there's so many opportunities. Like you said, they're incentivizing what they want. And so there's so much opportunity between real estate or owning your own commercial building, the different things you can do, to have even more deductions, even more write-offs. But it all at the same time, it's got this effect of pushing stuff down the line, and it's got this effect of not just helping your business grow, but gaining assets that are going to add to your net worth,
Yeah.
which are more of a long-term play for you as well. And that's just kind of like the house I bought today. Everybody keeps asking, well, one of my neighbors asked, well, where are you going to sell your house? I'm like, dude, my goal is to never sell a house. Like, I just buy one and then rent out the last one and then keep rolling forward.
Yeah.
The only time I ever fucked that up was the first house I ever bought. I sold the thing to my office manager. And now I've got that thing under contract of where I just cover the mortgage. It's like a sub-2 contract, and then I rent it out, and it's
There
still
you
one of
go.
our rental properties. So
Genius. What as you had your Illinois office and you were expanding into Florida, what are some of the issues that you confronted when you were expanding into Florida from a monetary
I mean,
standpoint?
my biggest issue is always the monetary standpoint. It's like it takes a lot of money to do some of the stuff that we do. And I think that's why I'm so enthralled and just I love Elon Musk, man. The guy is a gambling risk taker, wild man. And I'm reading his new
He is.
I'm reading, who is it? They say if you have a book written on you, want it written by Walter Isaac.
Yeah.
And so this just came out. And I'm reading that, and I realize that like I might not be as audacious and risky, but I realize that I'm kind of the same way. Like I don't care about taking big risks because it came from racing motorcycles where a bad day was like you could be paralyzed, broken bones,
Yeah.
in the hospital, and die. And so even if you had problems in your business and you go bankrupt or you do something, like I just didn't realize, you don't know what you don't know about. There's so many ways to keep forging forward and navigate anything. And most times the bigger the hit you take, the more you learn that if you're going to keep going, you're 10 times better afterwards anyway. And so, yeah, for me, the biggest struggle has always been if we're trying to expand into something new. Like when I first came to Florida, like, man, it just took a lot of money. And I had probably I had my credit line ran way up. I probably had
Yeah.
130 grand on it. My Capital One or my Amex card probably had another 110 on it, but it was what it was. And I've always saw that stuff. And some people will say it's risky and stupid. And we keep money to the side too, but I've always saw those things as big motivators. It's been a very burn the ships, you got one option, and that's to make it work. And I've never understood the other side of that, because even if you had a year's worth of savings, if it's going to incentivize you to suck at running your business and not push like crazy all the time, like no amount of money doesn't run out if a bad enough thing happens.
Yeah. Do you have any partners in these? You mentioned a partner in the dealership, but do you have a partner in your lawn care companies?
So, and even the dealership, it's not like a partner in ownership. It's just like he's a high up that's going to be getting commissions off of things.
Oh,
So,
okay.
there's nobody else on any of the entities I'm involved in, other than we have a business called Long Nine Properties in Illinois. I can't remember how many rentals we have, but me and two friends have rentals
Gotcha.
together. I think we have somewhere between 6, I think, and 9 units together. That's the only thing we're partnered on. And other than that, everything has just been me, and my partner has been the bank and or Amex sometimes. So I've always wanted to keep it that way to the best of my ability, unless someone, at the dealership, that's something. The hard part about the dealership of how I can't really write it into a partnership is it's all under the Landscape umbrella. It's not a separate entity from that company. And that was because I needed to be able to go out and get, when you have a dealership, and this is what it is, unless you just got gobs of cash, you've got to have a floor plan loan agreement with like a Wells Fargo or somebody. And so we've got a $500,000 floor plan to cover the equipment.
Buy inventories.
to buy your inventory, right? And what's cool about these is like as long as we get to enough sales, like they'll cover the interest year round. We haven't paid interest on anything. That thing has just covered our equipment, right? And but my goal in this is I put it into the business. The business was established and had been there forever. It was to create a new entity for the dealership. It wouldn't have a 7 year track
History.
record of creating revenues. And so it makes it where a situation where Todd, yes, I would like to, that would be a cool thing to be in a partnership on, or give him like a minority stake in the business, because I'm more the financial and he's more the legwork and brains of selling mowers. And so what I've tried to do is just make the commission part really sweet for him as of right now, until maybe in the future we do roll that into an entity, or we do something where it becomes a partnership.
You've mentioned a couple times what how important the relationship with a bank is. I was told
Yeah.
by a mentor a couple years ago that anyone who owes less than $2.5 million to the bank is in trouble. Anyone who owes the bank more than $2.5 million has the upper hand. The bank's in trouble, right? And they're the ones taking you to dinner and offering you opportunities, right? But how important has
Yeah.
that relationship with the bank been for you?
It's been everything, man. So the part of the story that I didn't the part of the story I didn't say is that we came down in Florida in 2020. Well, we also did it in 2017, but we had to go back because management
Mm,
failed in Illinois. And that was the beginning of the first real banking business relationship I'd had, a legitimate banking relationship rather than this just equipment loans that go through a dealer.
yeah.
And so I came down to Florida, and it was the first time that I'm like, man, I'm really thin on trying to make this work. And so I was like, let's try to get a line of credit. And a US bank immediately was like, no way, not risking that on this. This went through the algorithm and that does not compute. And that was when I first got connected with a small bank in Illinois, and they gave me like a $20,000 or $25,000 line of credit. And that has been something that built over time and built over time. It was my initial like business relationship, and now it kind of subsided because a lot of the people, the original lenders I had dealt with, they one did not work out there, and we worked together a bunch, and it was helpful, but you could tell he's fading away. Then they put someone to replace him, and he was worthless. But now I finally got a great banker back there again, and the way this relationship's been when it's good is it's allowed me to not have to go to a dealer and talk about financing through a dealer or anything we're trying to do. I, a lot of times they're just like, "Hey, bring me the purchase order, and we'll finance it." So it's expedited any kind of activity I wanted to take in my business, because they already knew us. They already knew we had a reputation of paying our bills and managing our credit and doing these things, and so it's allowed us to move faster. And that's been huge, because a lot of times, like, you see all this cat, for example, you see that cat equipment has like a bunch of, or maybe not now, but did have a bunch of 0% interest rates. Well, just because they have that doesn't mean you're not paying way more for the machine for them to do
Fees.
that. Where I can just go get a damn good interest rate from my bank, and then I can have that piece of equipment. I don't have to do the whole. I
Yeah.
can save money, and I can do it quicker. And that's actually turned, like when I said the bankers that hadn't worked the best at this location all went to the wayside, and I've got some awesome again. They told me they wouldn't borrow money for my Florida location. And I'm like, man, it sucks, because I don't have a real good bank here yet. That's a
Yeah.
small bank, got that great connection. But now the new guy's like, dude, I don't know why they told you that, because we'll be able to refinance all your trucks that have got the higher interest rates on them. We'll be able to get them all down to 8%. I'm like, why? I don't know why we didn't know this. So yes, the relationship's been huge. It's allowed us to grow that one line of credit. It's the only line of credit we've ever really used. But I've had friends always tell me, it's like, you need to try to grow your lines, and you need to try to grow your credit availability. And so, since then we've opened up other like $100,000 lines at a couple other places, just so we've got more war chest of worst case scenario on top of
Yeah.
everything. Yeah, I mean, it's just I can't imagine doing it a different way. I could definitely do my business and be smart and grow it slower and not have debt. I just don't really see a reason. Like, I don't see a reason to not
Well,
do it.
well, and I think the other thing that a lot of people forget about is your debt is tax free. If
That's
not, now you're deducting the interest, and the ROI on that debt, as long as it's higher than the interest, is only going to serve your business better. So why
yeah.
not borrow if you have the capability to do so?
You
So
can't do the buy, borrow, die thing if you don't borrow.
yeah.
You know, you can't push it down the line if you don't do that. And so, yeah, it's been a big thing for us, and that's you're right. It's the other thing I've seen. Like, if you're able to buy a huge apartment building, you're able to pull cash out of that
Yeah.
business or out of the property because you've appreciated it and you took that money as earnings. Well, it's not taxable earnings. You can't tax a loan,
Yeah.
and
Uh, I
so
had like 2 days ago, I had a guy come to me and do some tax planning before the end of the year, and there was some equipment that he needed to go buy. He's like, "Well, interest
mhm,
rates are really high right now, so I could just go pay cash for them." And we're talking six figures in cash for this inventory. And I said, "Why in the heck would you go pay six figures in cash when you could go pay maybe $30,000 in cash as a down payment, use someone else's money to purchase the equipment, and use the remainder of those funds to advertising, marketing, software, human capital, other things that are going to add a potential ROI in your business and still give you the deduction." Like there's
yeah,
just a smart business decision that I think a lot of people overlook.
and this shit will be paid off eventually.
Yeah.
Every month that goes by, my balance sheet gets better.
Yeah.
Like
Yeah.
my liabilities go down, my assets go up, and then this cool thing that happens before you even notice, like I've got stuff that on the other end of the deal, even if I'd financed it 5, 6, or 7 years, like because we've got so much stuff a truck for us, you just don't put many miles on a landscape truck. It just does not travel that much. Even Mo trucks do. And so, like, we're going to be able to keep this stuff easy 7 years, even
Yeah.
longer. Well, now we're seeing the tail end of like our stuff starts dropping off the list and is getting paid off. And so that's gave me the fortitude to buy more new stuff. And sorry about the message there, but
No, you're good.
I got to get muted. Buy more new stuff in Florida because in Illinois I bought all old used stuff because I had a broke mentality of I don't want to have loans. I want to own it all outright. And that's cool that in Illinois we don't owe. We owe on one truck out of, or I think we have one truck that's a lease. And so we
Mm,
really don't owe any vehicles up there. And there's probably
that's cool.
18, 19 vehicles. And that, yeah, that's cool. But it's made me realize the stuff we did borrow on, the skidster, it's going to be paid off in a year or two. There's a truck that just paid off. There's a mini skidster that's been paid off for 2 years. So on the back end, stuff's dropping off, even if we're adding stuff on the front end. And yeah, like it was better equipment that I could have owned it and it could have bought something cheaper, which I did a lot of in Illinois. But now I've seen like I could have had a lot of stuff that didn't have to be worked on hardly at all for 5 or 6
Yeah.
years. And I could have saved all the repair bills that would cost more or equal to the amount that it would take
Increased price.
to make a loan note.
Yeah.
And that's not even just to make the fucking thing get it fixed. It's also the deal of the downtime and the potential lost income you have because you had to put a thing in a shop and turn it down for a day. And for us in like both locations, a landscape truck for two people to drive it, Florida or Illinois, is anywhere driving between $2,800 to $3,000 a day. And so if the truck goes down, it is tripling almost any truck payment you've got.
Yeah.
Like so I don't know. I just realized like the owning everything outright. Like, why does it matter?
Yeah.
You know,
No,
and if
that
they're assets too, that this is a big thing with this. And I don't think everybody should take my approach because I don't think some people probably don't have it in them to cover the bill if shit gets bad or to figure out a way.
yeah.
So I'm not special. I just know that I trust myself to figure something out. But what I do know is if you have an asset, you can always sell the asset. The line of credit stuff's a little more touchy, and I've gambled on it too, but because there's nothing to sell. If you can't,
Yeah.
if that's maxed out, you got no way to pay. There's nothing to sell. But yeah, when it comes to the assets, it's a no-brainer, man, to have some kind of hard thing you bought that's going to help your company make more money. I don't know why you wouldn't put it on a note.
A couple of things that you mentioned while we were talking about that. So when the first time we met was at that quarter 4 Apex meeting for entrepreneurs,
Yep.
and the biggest topic that we discussed at that meeting was financial statements, particularly a profit and loss. However, you mentioned something which I think is a little bit more important in an operational business, which is your balance sheet. But I
Mhm.
guess the profit and loss balance sheet, chart of accounts, how often or what importance do you have in reviewing your finances for the company?
So even after that meeting, it made me want to push to do it more,
Yeah,
right? Um, Balance sheet is something that I look at, and it's more that I meet with monthly, and I get my opinion from my accountant, and then I glance at it too. And so, like every month, we'll meet. But the more important immediate metrics to me, I was just focusing on job costing a ton in the company, like everything that's going on daily, because that's like the compass to the company that leads you in the right
make or
direction.
break.
Your P&L is not going to look good if it didn't work well along the way.
Yeah,
And so, but since that meeting, like I realized our third quarter in both locations wasn't the best, and it's typically a quarter that it can be up and down. It really depends. And what I'd realized is I'd lost sight of a number that meant it, just like job costing, another important number for us. I stopped following this because we did so much job costing a year and a half ago. This was like everything I talked about, and that's purely just the 1% of labor revenue. And so I'm looking at numbers all the freaking time. And weekly, I'm looking at our P&L, and I'm reporting to the team what our labor to revenue percent was, because I looked at that third quarter and I compared the third quarter with Florida. Last third quarter, we killed it, right? And so I looked at this year versus last year, and I looked at the difference. And the biggest difference was, our labor to revenue jumped from 30% to like 38 or something
Mm,
percent. And just that small change changed the gross profit so much that I ran because I'm a numbers geek and an Excel nerd. Like, so I throw it all on Excel sheets and I do, this is how it went in reality. And then I did, okay, here's a hypothetical of we raised revenue to get the 30% labor to revenue. And then here's a hypothetical of we lowered labor. In both situations. In the lowering labor situation are taking that labor to revenue down to 30%, raised our gross profit from 40 to 48, which tripled our net profit. The other one, I raised the top line and it brought our gross profit to 52% and like doubled it it went from where it was at to double or even more than how it already got better on the first example. And so that number in our business, because we're all labor,
yeah,
labor to revenue is everything. It's an efficiency score of our company. And the closer to 20 to 25 we could be, I mean, sub 30, I think, is beautiful for our company. And that's really the guiding factor. A lot of the other stuff shakes out in the mix. Like our overhead, our overhead could get out of line and get crazy, but it could never outcompete the problem. It's kind of like you can work out as hard as you want, but you can't get abs if you don't eat right.
yeah.
Like it's the exact same thing. The eating right is the team being efficient with their labor. And so yeah, we look at all of it. The balance sheet's more meeting with the accountant and getting his overview and his thoughts on the whole company. It's something that I don't look at individually that often, except for maybe a couple times a year if I'm doing some of my own work. But so monthly we meet on that. Weekly I look at my P&L and I look at reporting that labor to revenue. And daily we're job costing projects that are getting done in the company.
Had you not done that consistently, do you believe you would have been able to vertically integrate and expand into Florida or add the dealership into your business?
No, I don't think so. And you know what's funny? Here's another great thing about debt. Like this is one of the good things that goes back to borrowing money. I always knew that it's very important to be good with your numbers. But the more we leverage the company and leverage lines of credit and stuff, I was like, we have to be better with the numbers.
Yeah.
There's too much liability here to not know what's going on. So out of necessity, we kept increasing the metrics we were looking at to monitor and make sure we weren't going to make a big mistake. And so, yeah, I don't think without the metrics that we follow and the things that we watch, we couldn't have done half the stuff we do because we couldn't have kept up probably with the data. We couldn't have kept up with like where was the company heading and how was it performing. And I mean, just to be able to have the info to be able to present it to a bank or to do anything
Yeah.
that you want to do in general. Buy a house as a business owner. So yes, and this has pushed me to realize There needs to keep being new metrics, but they need to be the right ones. I don't want to look at 1,000 different things and call them important. I want like the top 3, the top 5, the top 10 metrics that matter the most to making the company be as profitable as possible.
Well, you mentioned something that I think a lot of people overlook. In fact, there was another individual in our association that he asked this question in the Facebook group not too long ago. He said, "What for those that are earning 7 figures? What recommendations do you have to become more of a financial expert in your business?" And my response to him, which I think you actually highlighted really well, maybe without even realizing it, is that you shouldn't be the financial expert in your business, especially if you're
Yeah.
earning as much as you talked about having a top line of 5 million. Like, you should not be the financial expert. There are a couple things that you should review on a consistent basis, whether that be a daily, weekly, or bi-weekly, but there has to be someone who is that expert that you can lean
Mhm.
on, partner with, and talk to review those metrics, who does understand the other percentages, break even analysis, net profit percentages, cash flow projections, different things like that, to help your or debt leverage to help your business grow. And you mentioned the fact that, okay, these are the metrics that I look at on a daily basis, these are the things that I review on a weekly basis, and this is what we have a conversation with my accountant on a bi-weekly basis. Like, that
Mhm.
for me is extremely important and highlights your ability to be able to succeed, is that
Yep.
reliance on that financial expert to help present the data for growth.
Yes. You're spot on. And as you get bigger, like, so there's like a two sides to that. As you get bigger, you need to build like a board of people that you trust
Yes.
anyway. Advisors, right? You need a lawyer, you need an accountant. And at first that doesn't seem feasible, but then you realize exactly what you're saying. You shouldn't be trying to be the professional in everything. Now, that doesn't go to say you shouldn't be educated.
Yes.
I shouldn't hire Brady and say
Do
it's in
everything.
Brady.
It's your job.
Yeah. Yeah.
Yeah.
So because that was one thing where I feel like I have an advantage, and I don't know if this is a positive or a negative, but my wife tells me that I come off to most employees and people, and most people love me. But she says I can be very, very intimidating with the way I approach situations.
Yeah.
And so that's not like that I'm trying to be, but when I want to go in and talk about finances and talk with my accountant, I want to not have my head in my ass because I don't know anything.
Yeah.
And when I first started, and I'm obsessive. I obsess about everything until I at least understand what I deem to be what I need to know.
Yeah.
So when I started the business, I ran the QuickBooks stuff. I reconciled the accounts. I sat on YouTube for hours listening to how a chart of accounts should be laid out, how you should reconcile, why you should do this, why you should do that. So then I could go and have a conversation with the person that actually does it. And I've never had an accountant that didn't say, you don't talk like most business owners about this stuff. And I'm nothing special. I just tried to know a little bit more than the average person. So then I could be confident in the conversations. It's the same way it is with knowing the market, right? You go to all these investors for the company and they're running 401k plans. My biggest hang up with the market, like all the 401k plans, I go and sit down with these people. I'm like, dude, you don't know anything. Like, this isn't even my job, and I know more than you.
Yeah.
And so it's not to say, yes, you should hire professionals. You should know enough to hold them accountable too.
Well, yesterday, so on Tuesdays and Thursdays, our whole staff comes to the office. A lot of them work remote, but they all come to the office for trainings and group work and lunch and whatnot. Yesterday, we were having a conversation about some clients, as we typically do, trying to make sure we're up to date and addressing any situations that might need to be addressed. We were discussing a couple clients who, when we've realized after they were onboarded that they really just they hand off their stuff and they expect that we'll do it for them, which
Mhm.
we're doing it for them, but they're limited as to how much growth they're going to experience or how much taxes are going to be saved, because it's not that partnership that you talk about. And,
Yeah.
and oftentimes what happens is I think people get into the mindset of, I don't know enough, or these conversations intimidate me, or I'm not organized with my finances and that's embarrassing, so I'd rather just avoid it.
Dude, what you said, I got to interrupt you right there. That thing right there was one of my biggest hangups,
Yeah.
and everyone I know about finances' biggest hangups, because showing people your numbers feels like getting naked in front of a crowd.
Yeah.
And it feels like, oh man, what if they see something's wrong with me or whatever? It's like, man, if they don't see something is wrong with you, they can't fix you.
Yeah.
You know, if we don't catch the cancer early, the cancer will kill the thing that you hope to make survive. So, everybody I ever talked to about numbers, because I know how it felt. Like
Yeah.
now, I just don't even give a shit. Anybody can look at anything. I don't care, even if I'm fucking it up. Maybe somebody can give me some advice. I don't
Right.
know.
Yes.
But, like, I just remember how bad it used to be. Of like, man, I can't imagine another accountant seeing the thing and seeing how bad it might be.
Yeah.
And I know that's how everybody feels. And I guess like if there's one thing someone could get from this conversation, know that's how everyone feels about their business at some point until they realize it's better to have more people involved.
Well, and I'm sure you feel the same way, but I I'm always trying to figure out, shit, what am I doing wrong? What doesn't look good? What can be improved? Because there's only through that discovery am I going to be able to grow, right? But
Yep.
what I was going to say earlier was, for whatever one of those reasons, your inability to work effectively with us is going to mean that you grow slower or you pay more in taxes. So your ability to, I commend you for your ability to work hand in hand with the part. And maybe you're blowing smoke up my skirt. I don't think so. But if you are, talk with the accountant on a consistent basis. But having those meetings allows you to reach that higher potential.
Yeah. And I love what I want to form with everybody too. This is my expectation of a relationship with the people I work with, that I want to be able to text you and get answers.
Mhm.
I mean, I don't want to be a pain in your ass.
Right.
And the main CPA, it's like, if I'm buying the house or I'm about to make some crazy move, I want to be able to text you and get a hold of you on that. And that's really where like all this stuff, like the person under him that does all our bookkeeping, she's already talked to me 3 times today, asking me about a little question.
Yeah.
So it's like we're all connected in this web of, they're like partners to our business. And I've done what you're talking about too, though, in multiple different levels. And that's something I wanted to expand on, is I've let them just handle their stuff.
Yeah.
And I hoped for more. And I've still met with them. I've always been a big proponent of meeting like once a month. And sometimes we'll get busy, and sometimes does that get pushed back?
Sure,
Yeah.
life
And
happens.
last year that happened a lot. And I told them, hey, this year I just want to be setting dates. I'd like to set the whole year before we start the year for once a month.
Yeah.
And then if there's an issue, we can just move that calendar appointment. But what I realized, I did this in other stuff too. I got a person who does all of our AdWords. I realized it's like I get some of the reports, but it's like we need to be meeting once a month and talking. All those people
Yep.
that you're relying on as experts, just to let them run free, that's not really the way it's supposed to be. We should always be touching base, checking in. What else do you need from me to do a better job? Because that's the thing. You don't bother the accountant. You think everything's good. Hey, man, they don't call me. There's no fires. There could be a million things they could be doing better for you if you were actually synced up and talking about those things.
This is funny because I actually had a sales call, an onboarding meeting with a client yesterday who kind of ran into that situation. I mean, their business is very successful. And he had that relationship with his accountant where at the end of the year, the accountant would request his information. He'd send it to him. They wouldn't really have a conversation, and he thought everything was going good. Well, come to find out, that accountant's passed away, and now we've got to go back and redo 4 years worth of work. And that bill on redoing 4 years worth of work started at 4, ended at 12 for him, and and that was some other work that was being done by other accountants that he was referred to, and finally came to me. And he said, hey, truthfully, the reason I haven't come to you is because we work with a lot of the same people. I didn't necessarily want that, and didn't, the embarrassment of not knowing what's going on. And say that again.
The exposure.
Yeah. And I said, well, that's fine, but here's what your cost is going to be for us to give you everything that you're asking for. And he goes, well, that's more than I was expecting. And I said, well, you need more than what you were expecting. And so, it's kind of this, you get what you pay for, but most people view what I do as a cost, where it can turn into a really big investment if you do it right. Big investment.
I mean, you should be able to leverage that relationship.
Right.
And both people should be able to win. You should be able to earn money. You should be excited that my company grows.
Yeah.
You should be on my side that my company grows.
Well,
I have the same relationship. Like, it's the same way with our insurance people.
Yeah.
Right? Like, they should be stoked that we buy more shit. the account keeps getting bigger. There keeps being more liability.
Yeah.
There keeps being more workman's comp.
Yeah.
You know,
Well,
I also want to be able to
I
help
always
you
say
and tell you
my goal is
wrong.
to complicate your situation, because if I can continue to complicate your situations, it means a couple things. You're making more money, you're paying less in taxes, and we're making more money because we're more valuable.
Yep.
It's really what it is.
Yeah, and it's so easy. I do think it's very easy. I don't want to discredit your industry, but I
No.
think that it's easy to add value if you're just smart about it.
Yeah.
Like you can multiply your cost by a lot really easy if you
Yes.
do the right thing and you try to pull the right strings.
Yeah. No,
Man, it's good. Do the right things and pull the right strings. Like that.
I would agree. The one thing that I did want to kind of touch on, we've kind of gone over your business a little bit, but recently you've started to do a little bit more of the coaching. You started to jump into this mentoring space and advising other home service companies.
Yep.
What are some of the things that you're discussing with them? What are some of the things you're seeing that they're struggling with that you're able to come in and implement and help them with?
And probably it's like a lot of what we're talking about, right? Numbers have always been at the forefront of what I deemed important in the company
Yeah.
from the beginning. It was instilled by the very first mentor that helped me like note it all down in a leather journal,
Yeah.
right? And so it's either creating your hourly rate, knowing how that like affects your business and trying to have that on point. Between those things and general hiring and employee stuff, a lot of the stuff that sells the work and produces the work. And I'm big on those things as far as like my business philosophy is, you've got to, if you focus on marketing, sales, and production, and then just continue to make those better a little bit. Okay, marketing, we're going to add a new way that we market better. We're going to hone it in. Sales, maybe we add some templates so we can sell faster or whatever. And you just keep working that wheel. That's kind of like my trifecta of a philosophy of what grows your business really fast. And the areas that it's always easy to try to find a new way to market or to do this, the areas that people struggle with is knowing their numbers and hiring people and managing that liability that comes with hiring people from a standpoint of having the right things documented and everything else to really protect yourself. Because we all, it's very easy to grow. And some people don't think it is, but at a point you realize you do the right things, it's easy to grow a company.
Yeah.
What happens is it's very easy to grow a company. It's very easy to forget about the liability you're incurring, and you don't keep up with your protection on the liability. You just grow your revenue through the roof, or your liability through the roof, and you keep your protection from that liability down here with all kinds of different things in your business. And that can equate to a lot of problems.
Yeah. No, that's good. As you were talking about kind of those three core pillars, I mean, all those things are the boring stuff that like
Yeah.
realistically, and that's what I think most entrepreneurs miss out on is, hey, let's get the boring stuff really good and really dialed in, because then the fun stuff can just get bigger, better,
Yeah.
you know?
Yeah. It's like, what is business? I mean, this isn't necessarily, for me, I'm obsessed with what I do. And I don't think I'm wired like most people. So
Right.
coming to work every day is fun for me. And I like looking at numbers and I like a lot of the monotonous stuff. So like to be successful in business, you got to do boring shit over and over and over every day because I mean, unless you just enjoy the magical fires that pop up all the time, like it's all a bunch of the same, that then you start figuring out how to delegate and allow more and more people to run this wheel faster and
Yep.
faster and faster.
Yeah. Yeah. No, that's
So,
great insight. That's really good insight. What where can people find you? Home service based listeners, where can people find you to maybe get some of that guidance? What other projects are you working on? Tell me a little bit about some of that, and then any final thoughts for the listeners, Jacob.
Um, so you can find me, Jacob Godar. Can't even say my own names. That's the problem. Too much stuff going through
It's
my head.
Wednesday.
Jacob
We're
Godar.
it's Wednesday. We're halfway there.
I know. I've already lost the best day of the week. But Monday is like best day of the week. Friday is the second one. Um, so Jacob Godar, Instagram and Facebook. On YouTube, you can find me as well. I just looked at the count because I was showing my son because he said he wants to make YouTube videos. It's not like I've got a ton of subscribers, but I think we're at like 7,300 subscribers.
Nice.
But I've made the more impressive things. I've been making these videos for so long that I'm coming up on 1,200 videos.
Wow.
So
That's a lot.
we
That's a lot of videos.
we piled up a lot of videos over the years. You can also find me, and my wife's been involved time to time on Grow by Design. That's our podcast. And if you're interested in the coaching group, you can go to jacobgodar.com. You can get on the waiting list for it. It opens 4 times a year. And yeah, so those are probably some of the best ways. Instagram, I'm most active on. And if you want to connect with me, that's usually the easiest way to reach out. And but any of those things are great ways to touch base. And then, for me, the project I'm working on, man, I'm just trying to grow the things consistently around me so people can continue kind of raising up.
Yeah.
I really have a goal of starting to have more people make 6 figures a year. So that's a big project to me. This house thing that's going on is going to be integral in the business and everything else. So that's a big project to me. And I'm looking for ways to make our coaching group add more value all the time to everybody that's involved in it. Because my thing is, I just like with employees that I want to see them earn more. I just want to see people win.
Yeah.
I'm pretty confident in my ability to grit my teeth and take any amount of pain to get what I want. But I just know that that's like one of my special skills. If I could make it easier for somebody else so they don't have to do as much white knuckling, teeth gritting, and losing all their hair over the deal, I would love to share those things. So yeah, that's some of the projects I got going on now. And a takeaway, you need to build a huge network of people that bring the right type of value to what you're doing.
Yeah.
Whether that's your internal people that are your team, or your external people that are your accountants, your lawyers, your subcontractors. If you're in my industry, you have subcontractors in any industry. You can be subbing stuff in yours. But you need to build a network, and you really, really, really need to focus on the connection between the people who are driving the most things in your business. And like for us, it's everybody. It's like even without these higher up advisors and more executive figures, like they would be nothing without the lay and vice versa. So yeah, it's really about building a network and focusing on the team as a whole.
You said something, just my final thoughts. You said something that made me think of the idea that you can either pay for the mistake or you can pay for the experience. And the experience is
Yep.
always going to be cheaper, even though it might seem like it's a bigger bill sooner, So I think sorry, go ahead.
No, go. It's what you're saying. You just popped the thought in my head about that.
No, that was my thought, is you can either pay for the experience or you can pay for the mistake, but the mistake's always going to cost more.
Yep. And so, and that's funny. Like it's paying for the experience. The whole mindset. Business is all about mindset, right? It's all about how you perceive the world. You can say that there's nothing out there, there's no opportunity, and you're right. Or you can say there's everything under the sun. I can be as rich or as whatever as I want, and you're right as well. And it's so funny that like I would always look at the struggles and think that we didn't train our team enough or this or that or the other. And I hear Andy Frisilla talk about this a lot of times. All those little mistakes you do make along the way, and people that don't want to grow and have a bunch of employees, like, yeah, they're going to make mistakes. Those are all, like, I thought we weren't paying for training. We were paying for training. Those little mistakes were all training fees.
Yeah.
And we've been paying for those since we started the company. And so you just made me think of like that's another huge thing is like in our group, we don't have, anytime we talk about mindset or perspective, we don't have as many people show up to those calls. It's sad. Because if you don't realize that in your business, that's the biggest thing that would make the big difference of all.
Yep.
I would have a conversation with an accountant if my mindset was that even though I've got a bunch of problems, this is ultimately better versus got so much scarcity that I don't do anything. So I'll get back in line.
No, you're good. That was it. That was my final thought. I want to thank you, Jacob, for hopping on. I feel like it was a very, very good conversation. I feel like there was lots of opportunity for people to take and implement. So again, last thank you for hopping on.
Dude, appreciate it, man. Anytime.
Absolutely. For those listening, again, thank you for paying attention to the show. If you have questions or want to connect with Jacob, we'll have his information in the show notes. If you did not like our show, please let us know. We're happy to improve. Or if you have anyone else you'd like to listen to, let us know as well. Other than that, keep slacking off. Thanks.
Thanks for tuning in to Slackin' Off. with Brady Slack.